series of videos on loan products that are available to use when you're buying a home. This is our video on FHA loans, and it covers both eligibility requirements for getting this loan, as well as some of the advantages and disadvantages of using this type of loan.
And if you haven't seen our overview video that we did, you might want to check that one out first, so you get an overview of all the different kinds of loan types that are out there. And then if you stick around to the end, as we always do, we have a little bonus for you at the end, so hang with us.
FHA loans are backed by the Federal Housing Administration, which means that the lender is protected from default by the buyer. This allows the lender to be a little bit more flexible with minimum requirements than they could be with other loans like conventional loans, which do not have the backing of the federal government.
And FHA loans are specifically designed for first-time home buyers. However, in this scenario, first time actually means anyone who has not owned a home in the past 3 years. To qualify for an FHA loan, you need to have a minimum down payment of 3.5% if your credit score is 580 or higher. If your credit score is between 500 and 579, you need a minimum down payment of 10%.
To reach these down payment requirements, you can use down payment assistance programs or gifts from family or friends, as long as the money transfer is clearly documented. This is a really important part of that, and so make sure you're talking to your lender if you are using gift funds as part of your down payment. If you aren't putting 20% down, you will likely have an additional fee included in your monthly payment, which is called the mortgage insurance premium. We will cover this more in a minute.
As far as a maximum debt to income ratio, you cannot be above 57%. However, this will vary from lender to lender and also depends on things like your credit score and down payment amount. The lender will take into consideration all these aspects when determining your maximum debt to income ratio for your loan.
As we mentioned before, homeowners who have not owned a home in the last 3 years are eligible to do 3.5% down as their down payment for an FHA loan. If you have owned a home within the last 3 years, then you have to do a minimum 5% down as your down payment. FHA loans were also designed to be used for primary residences, which means you can't buy a home with an FHA loan with the sole intent of then renting that home out. However, that does not mean that you can't, say, Airbnb a room or a casita if you are also living on that property.
You can also purchase up to a fourplex with an FHA loan, so long as you live in one of the 4 units. Again, it was not designed as an investor product, which is why living in at least one portion of the home is a requirement for the loan.
Single-family homes, townhomes, and as we mentioned, multifamily properties up to 4 units are all eligible for FHA loans. Some condos may also be eligible, but it does have to be an FHA-approved condo project to be allowed. If this is the type of property that you are shopping for, then you really need to make sure you are determining which complexes qualify. Your lender and agent can help figure this out for you, but that's very important to do early on so that you can actually purchase the condos that you're looking at. And then manufactured homes may qualify, but they have to be affixed to the lot on which they are located, and they must be built after June 15th of 1976.
There are also dollar limits on FHA loans, and it's based on where you live in the country. This is where it is important to talk to a local lender who can help inform you about this product and if it might work for you. At the time of filming, in Pima County, where Tucson is located, the maximum loan limit for a single-family home is $420,680.
While not offered by all lenders, a subproduct in the FHA loan category is the 203K loan. This is a renovation loan that actually allows you to combine the costs of purchasing the home with the renovation costs that you'd be planning to do on the property.
Eligible projects include replacing old or dangerous flooring, adding systems like air conditioning, adding and replacing roofing, gutters, or plumbing, making the home accessible for disabled persons living in it, or making structural repairs or changes to the home's foundation. So if you're in the mood for a fixer-upper, this might be a loan product for you. One of the advantages of FHA loans is a lower interest rate, often lower than conventional loan rates in the market. This can help keep your monthly payment manageable. Another benefit of FHA loans is that you can refinance from one FHA loan into another to reduce your monthly mortgage payment and mortgage insurance premium, even if you owe more than your home is worth. The government allows this because by lowering your monthly payment, it increases the likelihood that you will stay in your home and pay off the mortgage. This is called FHA Streamline. Since you're staying within the FHA program, you also may have less paperwork to complete the refinance than you would otherwise. A real advantage there.
As we've mentioned a couple times before, one of the disadvantages for the FHA loan is that if you're putting less than 20% down, you will end up paying mortgage insurance premium, or MIP, included in your monthly payment. This is another way to help protect the lender in the event of a potential default by the buyer. However, unlike with conventional loans, the MIP on FHA loans lasts for the entire life of the loan if you're putting down less than 10%. If you're able to put down 10% or more, then the MIP lasts for 11 years.
These loans are intended to be temporary loans until your financial situation gets to the point where you can refinance out of that loan into a more conventional product. With a conventional loan, any mortgage insurance will drop off once you reach 22% equity in the home. If you're able to, you can also pay your MIP up front at the time of closing. This will often be equal to 1.75% of the base loan amount.
This is where negotiating for seller concessions in the purchase of your home could come into play if you don't want to have to pay the monthly addition of the MIP, but also don't have the funds to necessarily pay that extra 1.75% upfront at the time of closing. Now that we have covered FHA loans, we have a little bonus for you. If you go check out the description, there is a link to download our buyer's guide so that you can have some information to get started on the home buying process. And as always, if you enjoy these videos, be sure to like and subscribe.
And if you happen to be looking for a home, either to buy or to sell your home, and you live in the Tucson area, we would love to work with you and be your partner. And if you don't live in the Tucson area, we have a form down below that you can click on, and we have a team of experts to help you find a realtor in your area that is top-notch, and will be happy to work with you in any home transactions that you might have. So once again, thanks for watching. Say something like, until next time.
Until next time.
We'll see you later.